When I sold my first options, I collected $169, closed it, I paid $311, and I collected another $372 on the second options. After deducting the fees of $10, I have a net profit of $220 just by rolling these options, which is a whopping 41% annualized return.
Till I can't no more. I got the horses in the bag.
Hi everyone, welcome to Investing Maniac. Terry here. Selling options has always been a good way for me to generate some passive income since I started in 2018. But do you know that when your options is in the money, you can actually roll it like a sushi? Today, I will explain to you what is rolling options, what is the best time to roll an options, and show you the real life example of option rolling. Before we continue, please help me to hit the like button and subscribe to my channel if you are interested in more investing or side hustle video. As an appreciation, let me show you how a cute dog rolls itself in a blanket. First of all, if you don't know what is options, you should refer to this video. I will leave the link in the description below. For all my past videos that I talk about options, I only talk about selling options. But today, I'm going to teach you how to buy options.
I thought you said buying option is like gambling.
Yes, buying option is actually like gambling for me. But the options buying that I'm showing you today is actually used as a part of the strategy for the option rolling. Options rolling is actually to extend the options that you sold to a further expiry date. For example, if Apple is trading at $170, if you sell a put option of Apple at $165 strike price, which will expire on 23rd September 2022, you collected $365 premium. 2 weeks later, if the stock price fall below $165, let's say it dropped to $160, you'll be assigned 100 stocks of Apple at $165 each if the options buyer exercise the options. But if you suddenly feel like
I don't want to buy the Apple share leh.
and choose to close the options by buying back the options with the same strike price and expiry date and pay a premium of $420. In this case, you made a loss of $55. So by buying back the options, you are actually halfway done in rolling options. To complete the roll, now you sell a new options at a new expiry date and favorably at a lower strike price because it will be less likely for the put options to go in the money. In this case, we choose to sell the new put option at $155 strike price on 21st October 2022. The premium collected is $375. Rolling done! In this case, you made a total profit of $320. You can choose to do the same whole process again if your new options go in the money again. Now let's talk about how to roll a call options. Let's say you have 100 Apple stocks that you purchased at $165 each. You sold a call options at $170 strike price with expiry date on 23rd September 2022 and collected a premium of $395. 1 week later, a good news come out. Samsung's phone explodes again.
But that is bad news, right?
But it's a good news for Apple ma. Then iPhone sales increased by 50% and Apple stock price go to the moon, all the way from $165 to $200. But as you have sold the call options at $170 strike price, you will have to sell your 100 Apple stock at $170 each for a $5 capital gain per share. With the premium collected, your total profit will be $895. But if you feel like,
And don't sell my Apple stocks.
yes, you can. You can either just close the options or continue to sell a new one with new expiry date and new strike price. To close the option, you buy back the same options at the same strike price and expiry date and pay a $3,000 premium. After considering the premium of $395 you collected, you have made a loss of $2,605. But if you sell a second options with $180 strike price, which expire on 21st October 2022 and collect a $2,200 premium, your total loss for selling the call options will only be $405.
Eh? If I just like my Apple share to be sold at $170 for the call options, I still make a profit. But why I make a loss if I roll it?
Wait, we're not finished yet. Now let's assume that Apple stock is trading above $180 on expiry date and you just let go of your 100 Apple stocks at $180. You will have earned $15 per share, which will bring your total profit to $1,095. The best time to roll your options is when your options is around 2% to 4% in the money. For example, if you sell a put options at $165 strike price, the best time to decide whether you should roll your in-the-money options is at around $158.4 to $161.7 per share. If you sell a call options at $170 strike price, the best time to decide whether to roll your in-the-money call options is at around $173.4 to $176.8 per share. But why 2% to 4%? It is because if your option is too deep in the money, it has very little time value, so it is very hard for you to roll it. For example, if one Apple share is $170 now, for an in-the-money put options of $220 strike price, which expire on 23rd September 2022, the premium is $50. If you look at another options of same $220 strike price but expire on 16 December 2022, the premium is also $50. So there's no point for you to roll too deep in the money options. You should either make a loss to close it or let it get exercise to buy or sell the share depending it is a put or call options.
You could have had it all, rolling in the deep.
I'll show you how to roll options in Tiger Brokers. If you don't have an account yet, you can register using my referral link in the description below to receive 88 SGD if you make an initial deposit of 1000 SGD and complete 5 buy trades. I also have some tutorial videos on Tiger Brokers mobile app. I'll leave the link in the description below. First, to close an options, you need to buy it back. Go to Portfolio. Under my portfolio, you can see that I have a TQQQ put options with $34 strike price, which will expire on 16 September 2022. This put options is in the money because TQQQ's current price is at $32.71. Click on it, select Close. Remember we are buying options now, so we leave it at Buy. I will use market order because I want to buy back this option to close it immediately. System will give me the best market price. Quantity will be the number of option contract you have, and in this case, it is 1. Amount will be the premium you need to pay to close these options. In this case, I need to pay $311 to close these options. Time in for select day, and click Place Buy Order, and your options will be closed almost immediately during the trading hour. Now, we need to sell a new put options to complete the row. Go to Quotes, select TQQQ, Options, select the new expiry date, select Put. I will roll these options to $32 strike price. Click on it, select Sell. I will normally leave the limit price in between these two prices. Input the quantity. Amount will be the premium you will receive for selling these options. Select Good till Cancel and click Place Sell Order. So if my order is filled, I will have successfully rolled my options to a further expiry date at a lower strike price. Let's see how much is my profit. When I sold my first options, I collected $169. To close it, I paid $311, and I collected another $372 on the second options. After deducting the fees of $10, I have a net profit of $220 just by rolling these options, which is a whopping 41% annualized return. To roll a call options, the process is the same, but just remember to select call options and a higher strike price. If you have any question, please comment down below or join our Telegram channel and group to chat with us. So that's all for today. Thank you so much for watching. I'll see you next time.